Hello friends, welcome back to Invest with Ara. On request, the stock being taken today is HUDCO, Housing and Urban Development Corporation Limited. The Excel spreadsheet in front of you is an Excel program wherein we put fundamental values of a particular stock and arrive at a signal on to whether to invest in that company at this point of time or not. The fundamental data are taken from an app known as the Stock Edge app. So let's go to HUDCO, Housing and Urban Development Corporation Limited. HUDCO's last traded price was 46 rupees 20 paise on 9th of November 2018. Now let's go to fundamental tab and understand about the sector, industry and the company. Sector is finance, industry is finance and housing. Now let's understand about the company. For that we click on the show profile tab. Here we could see that Housing and Urban Development Corporation Limited was incorporated in 1974. It is based in Delhi. The company is a wholly owned government company with more than 46 years of experience in providing loans for housing and urban infrastructure projects in India. The company has been conferred the status of Mini Ratna, public sector enterprise, by the Government of India. The business area of the company includes financing social housing and residential real estate through primarily lending to state governments and their agencies, which in turn extend the finance to or utilize the finance for the ultimate individual beneficiaries. So this was about the company. Now let's go to financial indicator. We'll be using this value onto our Excel program. So first is market cap, which is 9178.71 crores. Earning per share is 4. Price to earning ratio is 11.47. Industry PE is 18.08. Book value per share is 49.07. Price to book value is 0.93. Dividend yield is 1.2. Face value of the company is 10. And number of shares subscribed is 200.19. Now coming on to return ratio. For that we click on the ratios tab. We could see the return ratio. The first is return on equity, which is 8.42. Return on capital employed is 8.06 and return on asset is 1.8. So here we could see that the return ratio has not given us a signal to buy this stock at this point of time. Now coming on to efficiency ratio. The first is EBITDA margin, which is 82.56. EBIT margin is 82.42. PAT margin is 19.63. Earning per share is 4. Asset turnover ratio is 0.09. Days of receivables is 0.45. Days of payables is 20.11 and days of inventory is 0. So overall efficiency ratio has given us a signal to buy this stock at this point of time. Now coming on to growth ratio. The first is net sales growth, which is 16.48. EBITDA growth is 6.26. Net profit growth is minus 5.02 and EPS growth is minus 5.02. So overall growth ratio has also given us a signal to buy this stock at this point of time. Now coming on to solvency ratio, the most important ratio in shortlisting any of the stocks. The first is total debt to equity ratio, which is 3.69. When we click on 3.69, we could get to see that the total debt on the company is 36,205.67 crores and it's on a constant rise. Whereas the net worth of the company is 9,822.96 crores and it is also on a constant rise. The interest coverage ratio is 1.48. Now when we click on 1.48, we get to know that the earnings before income tax is 3,359.23 crores, whereas the interest that the company is paying is 2,267.85 crores. The current ratio of the company is 0.65. So overall solvency ratio has not given us a signal to buy this stock at this point of time. Now coming on to cash flow ratio. The first is cash flow per share, which is negative 39.11, whereas free cash flow per share is negative 41.25. So overall cash flow ratio has also not given us a signal to buy this stock at this point of time. Now coming on to valuation ratio. The first is price to earning ratio, which is 16.6. Price to book ratio is 1.35. Price to cash flow ratio is minus 1.7. EV to EBITDA ratio is 14.64 and market cap to sales ratio is 3.26. So overall valuation ratio has given us a signal to buy this stock at this point of time. Now the program in its entirety has given us a signal to not to invest in this company at this point of time. Hope you might have liked this video. Thank you.